the Billion Prices project, which will give you a little bit of a sense on how you can hopefully collect some of your own data. And as Fernando was saying, my effort will be mostly on the retail side, but you can use the techniques I'm going to show you hopefully to collect all kinds of data. So let me tell you a little bit of the status of data just as a motivation in macro and international. You'll find a lot of people criticizing the characteristics of our data. I just highlighted here a couple of papers or speeches where prominent economists have recently criticized, particularly after the global financial crisis, the type of data we have in general in macro. I will say it's not an old story. I found when I was a grad student this great quote by Zbig Rilges, this famous econometrician that did a lot of work with statistical agencies developing the hedonic techniques that are used to adjust for quality in price indices. And he had this great quote in a paper in 1985 on the AR, and he repeated this at his presidential address of the AA in the 90s. He said, as economists, we have typically shown very little interest in improving the data and getting involved with the gravitas of collecting our own data sets. And he sort of referred to this impression that we were relying just on what the government collected, and when we saw some imperfections, we were criticizing them. So he was exhorting economists to try to get out there and collect their own data. But the problem was clearly that, to collect data, particularly at the macro level, you clearly need an amount of resources that only governments could have access to. And that's where I think big data is coming to help. In a sense, what big data has done, and a lot of people focus on the size of the data sets, I think it just has given us the opportunity with very limited resources for anyone to go out there and collect information. So I'm just referring here to an article in Science magazine where there was a discussion of the potentials that these have already in 2014. But what are these sort of data sources that we've seen in recent years? There's a lot of administrative data. This is basically the micro CPI data, the macro PPI. These are data sets that the governments have been collecting for a while. You can have access to those these days. There's been a surge in scanner data that companies like Nielsen collect. And I've listed several others here. I've been involved mostly with the last two, but I'm going to focus exclusively now on online data and describe what we did at the Billion Prices project. And the story I want to tell you is one where we have these 5 Bs of big data that you probably remember that had a lot of impact in the way we thought about this at the beginning of the project. From now on, I'm going to use some fancy slides that I've been using for some other classes. So I hope it will get a little bit more interesting. But what are the 5 Bs? If sometimes people refer to just the 3 Bs: volume, velocity, and variety. You can keep on adding. There's one about veracity and really knowing what's happening behind the scenes. There's a lot of uncertainty about data, and then there's also the issue of value, how much value there is. The story of the BPP started with this one, with veracity and the seek for truth. We wanted to really know what was going on in my country, Argentina. So let me tell you the story. Some of you may already know this, but Argentina has a long history of inflation. And after relatively little inflation in the 90s, in the 2000s, we started seeing inflation rising. And the expansionary policies of the governments eventually started creeping into the CPI, and you had this official CPI that started going up. And then in 2006, it went about 10%, which becomes a very strong psychological number that starts to have an impact on the political side. So the government said, we have to do something about this. And obviously, they could cool down the economy, but that's not good from a politician's perspective. So what they did is they started calling the statistical agencies and asking, can you please tell me which are the retailers where you actually go and collect this information? And they said, no, we cannot do that because that's a statistical secret. But magically, for the next few months, the inflation rate started to stabilize. Eventually, they started fighting with the statisticians. They would complain, and they just fired them. They intervened the statistical office, fired everyone there, and magically, the inflation rate started to stabilize and it went back down below 10% again. Now, if you've ever lived in a country that has more than 10% inflation, you probably realize when you go to the supermarket, you know something is going on. It's more than 10%. It becomes quite obvious. And I'm just plotting here the results from a survey of inflation expectations that was conducted by the Tel Aviv University. And you could see how people were sort of, they thought inflation was rising quite dramatically, around 25% at the time this graph ends. And to some extent, this could be that people thought, you know, I'm reading that they are fighting the statistical agency, so inflation must be going up. But there was no way to test it until we realized that we could collect prices online. There was a ton of information online. Large supermarkets would show the details of all the products that they sell, the prices that they sell them at. There were not that many transactions online, but that actually made many of these retailers willing to show their prices without making much changes. They just wanted to show they were cutting edge. So I was a grad student and I had this idea. I said I could collect this data. Why? Well, it's actually a very structured language. When you go to a website, behind it, you have this HTML code that as long as the look of and feel of the page remains the same, you can teach a software to identify the tags that encircle, for example, the product's name or the price of the product. And if they didn't change the look and feel of the page, once I taught the software to do this, I could set it up and automatically collect this data kind of in real time for every product that they sell. And I started doing that with several Latin American supermarkets. I had the luxury of being a grad student, so I spent like 3 months figuring out how I could do this. But eventually it became very stable, and I was running everything on my laptop. And I collected this very large data set that I then used to replicate exactly the methodology that the statistical agency was doing. And you're looking at here just the price index normalized in 2007 when I started collecting prices. The online index had basically doubled, prices had doubled, while the CPI in the course of 5 years had only increased by around 25%. Huge difference. You know, when you calculate the annual inflation rate, it was basically almost 3 times as high as the government was suggesting. Now, I started writing a paper with this. It was the most fun paper I've ever, I say, written, because I was trying to show why is it that the government was, what was the government really doing? So the first question becomes, well, maybe it's the type of data. So I collected data in other countries. I created price indices that compared to the CPI. And you can see there are some differences in the short run, but the sort of trends were actually quite similar, even in countries like Venezuela, which had high levels of inflation, just like Argentina. And this next slide actually summarizes the annual inflation rates. And you can see the only place where I was finding a big difference was here in Argentina. In Venezuela, it's interesting. Chavez was actually did not lie about inflation. He wanted to show inflation so he could start expropriating some of the supermarkets that were selling these goods. But anyway, regardless of the point I made in the paper, this was not about the online data per se. So I became obsessed in trying to figure out what is it that the government is really doing. And the next, the graph that you're looking at here shows you the annual inflation rate. The solid line is the annual rate of the main index I just showed you. I tried changing the retailers. So you have all these extra lines here. Some of them were smaller. Another one was very large, and so all sort of gave me the same answer. Then I said, well, maybe they're using the list of price control goods, and that's the index that you see here dotted. And again, I was getting, sorry, it's this line over here. I was getting higher inflation rates. So I started looking at this graph and figuring out, well, what are they doing? And if you look at it closely, you have these two curves that sort of co-move very, very closely together. So this period in here, I don't know if you can see my mouse, but this period right here is a period of a recession in Argentina because of the global financial crisis. So naturally, I realized if you're gonna lie, you don't lie all the time, all the same way. You have to be dynamically consistent. So if there's a recession, the government also had to make the price index sort of fall over time. And the difference between these two indices that you see here was basically pretty constant. So after trying many things, I came up with this idea, why don't I just try a simple algorithm And what happens if I divide by 3? And then I realized if you divide by 3, actually the numbers match up really nicely, no? There are obviously some differences, but then I became obsessed. How is this even possible? And I realized, imagine you're the head of the statistical agency and you want to lie. You have two options. You convince everyone who's collecting data for you to lie, or you just let them do their job, and there's someone at the end that aggregates all the information, and that person was putting together all these sectoral pieces together and coming up with an aggregate number, no? And you could always deny, nobody knew the exact algorithm. They could have used a more fancier algorithm, but I don't know. They decided to basically just divide by 3. So it created a lot of statistical uncertainty. As you can imagine, if you lie about inflation, you're lying about growth, and real GDP was actually much lower. I did all sorts of interesting things here. You have Bensford's law, where you can use to test if someone is lying, if you're interested in that sort of thing. But then one of the things that I took a lot from this was, it taught me when I was doing this kind of data project that something that is very useful is try to keep on doing this in a sort of production type of setting. So I set up this website called inflacionverdadera.com, where which means realinflation.com, where I would show the actual statistics of individual goods. And I sort of did it because, in a sense, I wanted to show the real inflation rate and people could use it. But at the same time, it forced me to realize what were the things that I needed to improve on the data collection side to keep going and extend this project over time. So I encourage you, if you're going to do this sort of thing, if you expect the time series to become important, find a way, even if it's not public, find a way to continuously generate some statistics on the data you're collecting, so you can keep track of what's really going on. But this became quite public. I'm showing you a couple of slides here about the evolution on the news. This is a major newspaper in Argentina. It says, for the vast majority of Argentines, the indices compiled by the statistical agencies were manipulated. This was already 2008. The Economist stopped publishing index figures in 2012, and they started to using our data, which was very cool. And then finally, the IMF in 2013, after several years, decided to sort of issue a declaration of censure on Argentinian statistics. So it became quite obvious. But what was so amazing to me to experience was just how long the lie lasted. No, once these governments get into these practices, it's very hard for them to get away from them. So you're comparing here, the annual inflation rates that we were collecting online versus the official ones, until there was a new government in 2016. They came in, the new government, by the way, they just couldn't find the computers where the data was supposed to be stored at the statistical agency. Someone had, removed the hard drives. And so for a while, they actually didn't have any information to compute an index. But I would say eventually they started computing an index that resembles a lot the information we can find online. So I immediately, as soon as we realized this was producing sensible results, I went to see my advisor, Roberto Rigobon at the time at MIT, and we decided to launch this thing called the Billion Prices Project, where we wanted to use this data for measurement and research. So I have all these papers that I would love for you to read, but I'm going to move quickly and give you a sense of how the data evolved. We started in 2008. I started training undergrads to apply the same methodology I was using with the support of Roberto and MIT, and we started collecting data in about 60 countries and producing with this information inflation indices across several of them. So this is a little bit of the timeline. In 2010, we started producing an index with the US that resembled very closely what happened with the US index. 2011, we eventually became such a large project that we started a company to collect the microdata, and it publishes daily information in 22 countries. If many of you are interested in this kind of data, you can contact PriceStats, and PriceStats provides data for research projects as well. But we're mostly known for the work we did on daily inflation measurement, and it's because of this graph that you're looking at here. If you actually plot these lines that I was showing you before for the US, it moves very closely with the CPI, so we can anticipate what's going to happen. But most important, at times of crisis, central banks and others can get a sort of real-time metric of what's happening with the economy. And just to illustrate that, This is the US index at the time of the Lehman Brothers bankruptcy. You can see very clearly the day after they went bankrupt, there was this massive fall in the prices of all these retailers that were selling online. And the CPI basically took a month and a half to reflect that sort of change. So this information was also very useful on a research basis. I'm comparing some of the price data sets that were available at the time. This comes from a paper in 2015. And you can see there are obviously some advantages. The cost of observations are very low. We get this in high frequency. We can see uncensored price spells. So for example, if you are interested in when a product is introduced, you want to collect this type of information because statistical agencies would only start monitoring new products when the old product disappears. So all this became important. And I guess from an international perspective, the fact that we could collect data from about 60 countries made a huge difference. There were disadvantages as well, which happens with every data set. We had less categories covered. We had relatively few retailers. These are only large retailers that send online and offline, and we could not see anything about quantities or expenditure weight. So we had to rely on whatever the statistical agency was doing. So I'm not saying it's a panacea. Every data set has its plus and cons. So this is a long list of papers. Like I said, I'm not going to walk you through that, but we did research in macroeconomics and anything that has to do with prices. We worked on it. And I'm going to be focusing in the next session on these two things, LOP and market segmentation in this paper we wrote with Brent and Roberto, and also on tariff pass-through. How is it that the shock of the trade war is actually affecting prices today? No? But if you're interested, I put all the references at the end. Now, one question that I faced by building a new data set, and you're likely going to face this yourselves if you do it, is that people are going to question the quality of the data. And one thing that became very clear to me as soon as I saw the first referee reports was that people say, well, are these online prices relevant at all or not? No? So I wrote this paper eventually after many years of trying to get the statistical agencies to give me data. I wrote this paper that used another type of data collection technique that is becoming quite cheap today, which is the use of mobile phones and freelancers. So the idea was the following. I could get prices online for many of these retailers, but if I walked into the store myself, would I find exactly the same price? So what we did is we built this simple app that it was basically already existing. Somebody was using this for another purpose. I think it was to catalog books or something like that. And we asked the developer to make a little change to the app. And then we went into Upwork and we hired people in 50 countries to go to the stores and randomly scan the barcodes of some goods. They would send us the offline price, and then within 7 days, we would scrape the price on the online website. And so we were able to really compare these online and offline prices well. And just to give you a flavor, there's a ton of heterogeneity here, depending on the countries. In some countries, it's quite high, like in Canada or the UK. In countries like Argentina, you have a lower share of identical pricing. This depends a lot on, the characteristics and the evolution of the online sector versus the offline sector. It also happens when you look at the sectoral levels. If you focus on this column, food tends to be the one sector where there are bigger differences because the two markets are treated separately. But then if we're talking about clothing, if we're talking about electronics, the share of identical prices is very high. And this brings questions on why, but to some extent the transparency that the online world gives to these prices reduces the ability that many of these retailers have to actually price discriminate across locations in ways they couldn't do sort of in the past. But I'll stop there. What I want to do in 5 minutes, and this is going to be very short, is actually to practice some web scraping with you guys so I can demystify the idea that this is very hard to do, okay? It's not as hard as you think, and why? First, every single web page that we use has this very structured HTML code that has these tags that we can use and teach the software to recognize. There are many alternative tools out there. Some of you may already be doing this in R, in Python. I tend to use specialized software for scraping that will make the most of your life. Even if you're very good at R and Python, I strongly suggest you use this. And I'm going to show you in a second how it works. And there are also scraping services. If you have resources and you want to pay somebody to do this for you, there are many companies doing this. But it basically follows 3 steps. One is you create a template that will teach the software where to collect the data. The second one is to create a list of URLs or where the relevant data lies. And then the third one is to just run the scraper. Okay, so let's see if I can do this. Stop. So the reason I wanted to do that was to demystify this idea that this is a very hard thing to do. No? And just to finalize on that, I want to convey this is not just about retail prices. There's a lot more things that you can collect on that with this technology. Wage posting, for example. I'm actually working on a paper with Javier Cravino and Andres Drenik, where we go to this freelancer website, and we can see the wages that different freelancers set for exactly the same job. So if you're interested in comparing wages across countries, this is a great way to do it. I'm writing another paper on stockouts. Many of you probably experienced during the COVID crisis that many supermarkets have things out of stock, so you can keep track of all this information in real time. So you can think of real estate listings, customs data, wholesale prices, a whole bunch of things that haven't been explored yet that I hope this talk will incentivize you to start collecting data from. Okay, so that's about it that I had for now. So happy to take any questions or comments, or just go into the break.
And we should stop the recording.